I started buying Bitcoin in 2013. So I've been through 13, 14 crash, 18, 19, Black Friday. I'd say I've been through about 4 or 5 crashes, right? Every time it felt like retail is non-existent, right? They're like, where's retail? Who's the next bag of buyers? Every time it feels like, well, we're running out of steam because we're tapped out, right? We've already tapped out this market. There's not much left, not much juice left to squeeze, but the world is bigger than we think. There's always new buyers and they change in nature, they change in size. Now we have like family offices aping into projects that 3 years ago were unimaginable. We got endowments now doing direct primary investments in tokenized projects. That's pretty crazy. I think the world of buyers keeps getting bigger. You know, I was once retail as well myself, and that just changes over time. And I think, yeah, like there's new things that capture retail's imagination.
Akshat Vaidya, thank you so much for being here, man.
Thanks for having me.
I'm excited for this convo because I think for where you sit as co-founder of the Maelstrom Fund, Arthur Hayes, obviously a lot of people kind of know you guys as the smart people in crypto who find the good investments. And so excited to get your take on kind of where we're at as an industry and what you're excited about. But maybe we just start with kind of what you're seeing post-Genius Act becoming law, where you think we're at in this cycle as kind of institutions. They've been dipping toes, but now they're doing much more than that.
Yeah, so a little bit of background of who we are at Maelstrom. We're family office of Arthur Hayes. We focus exclusively on venture deals for the most part. We recently started doing liquid investments and another strategy that I mentioned that we can talk about later that we're rolling out now. But one of the first venture bets we made was in the stablecoin space, and it was Ethena. We made that bet about 2 years ago. And I think having seen what we were able to achieve, what Ethena and its other competitors were able to achieve without the Genius Act, now imagine a world afterwards, it's pretty exciting.
Yeah, we had Guy on to talk about Ethena and just seeing the growth. I mean, obviously coming from where Coinage as an outlet comes from and covering the Terra collapse and experimentations in stablecoins, you know, there's a lot to be done in that space. It's been exciting to see what Guy and co have been able to do. And I guess as, you know, we see more money flow into this space, we've seen a lot of numbers thrown out there around what it actually means for crypto. Secretary of the Treasury, Scott Bessent, saying $3 trillion slated to come in on you know, using these stable coins. Other people are saying 15 trillion eventually if they attack kind of the US dollar and the euro markets. I mean, how do you see kind of the TAM and what it means for the space?
I mean, it's a lot, right? It's like at some point it doesn't even matter what the specific number is, but it's a lot. And I think what's most exciting beyond that is also how it's just a very diversified group of holders, right, relative to before. So you're going to have a lot of diversification in holders of U.S. debt that we've really never seen as a nation before, and that's enabled by this new technology, which is exciting.
It's almost kind of weird too, because, you know, we were chatting with Paolo at Tether down in El Salvador, and, you know, since it's passed and kind of into it passing, he was talking about exactly that point, that like it opens an entirely new lever for the president in the U.S. to pull. Tether has more debt than Germany, I think, is kind of recently passed the 7th largest holder of U.S. debt. I don't know what that means from like a geopolitical standpoint. I don't know if it matters around investments in these things, but it's kind of crazy.
It's good. Yeah, it's good. I mean, we you know, I'm based in Asia. I've been in Hong Kong for 6 years, and you see the U.S. dollar being used in ways that weren't really possible before. It didn't make sense to serve, you know, some 80% of the population in most developing countries, and now it does because it's almost costless and permissionlessly. Users of new varieties and lower income users can access the US dollar that they couldn't before. And you can feel it when you know, Hong Kong has, for example, a large population of Filipino migrants who come there to work. They're able to send money back now in ways, and they're literally using stable coins. They've been doing it for 5 years. Yeah. And that's like an actual tangible use case that you see. My domestic helper at home in Hong Kong, she does this. She sends money back using USDT actually, in her case. And that's something that, you know, I think for me, before I came to Asia and I was living in the US, it was more just an idea, like, okay, theoretically, new kinds of populations can use the US dollar if it's in stablecoin format, but now actually seeing it is pretty cool.
Yeah, no, for sure. I mean, when we were down in El Salvador, just kind of seeing adoption there, mostly Tether, but the idea of where this goes, I think, night and day, where we were just a couple years ago. You mentioned kind of how you guys are structured. I want to talk about that too, in terms of where you guys are focused, and also hit on what I think is new for the space. Not a lot of M&A deals happening in crypto all that much, but you guys are kind of taking a new approach and looking at that. But maybe we just back up and kind of think about what the opportunities are in crypto that you guys look at specifically, and what you're most excited about.
Yeah, so as a family office, we're not beholden to the same timing pressure as some LP funds, right? So if you look at a family office as kind of this like evergreen fund with one single LP, we can be very patient during droughts, right? When there aren't really great deals to be done, and we can harvest very slowly as we need to over time. We don't need to rush for the exits. And we can also negotiate pretty bespoke and interesting arrangements in terms of what we're able to offer portfolio companies in exchange for lower valuations. So as a result of that, we can be super flexible. There's always a deal to be done in any kind of market environment, right? So whether it's a bear market, bull market, sideways, world's falling apart, or everyone's excited, whatever it is, there's always a deal to be made, and we just creatively structure ourselves for whatever condition we're in.
Yeah, and I guess in terms of conditions that we are in right now, I mean, Arthur has been talking about this for a while. I feel like I keep seeing Yahtzee post after Yahtzee post around like, all right, things are going to pop off. I mean, like, in terms of where we are in the cycle right now, how do you kind of look at where we're at?
Yeah, so we came to a point in around December, January, where there's a lot of hype, right, around what the new president would be able to implement. And at that time, we took a lot of profit because we were like, well, look, the hype is definitely premature because it's going to take a lot of time, right? One, we don't exactly know if it's going to deliver on these things. Luckily, so far it's tracking. But we also don't know how long it's going to take for that to happen. Even now, right, we're still very early. There's still a lot of things that kind of left on the table that we still need to get done as an industry through lobbying efforts and whatnot. But we're starting to see progress, and it's a little bit quicker than we were expecting. So, January, February, we took profit on a lot of positions. We took it pretty easy, started launching other business ideas in February, March, April. Now, we're getting back into the fray. In May, especially, we started deploying a lot. And I'm sure you guys have seen Arthur's posts about Ethereum products, right? All things related to ETH. We did like an internal bet within the firm. And Arthur bet on Ethereum being the outperformer this year. I bet on Bitcoin. So we'll see what plays out.
Well, I mean, both of those have done relatively well with where we've seen things go in 2025. And certainly I think a lot of excitement has played out recently for both of those because of the treasury trend in terms of publicly traded companies scooping up both Bitcoin and ETH. Sure. Michael Saylor, very popular for that in your side of the bet. On Arthur's side of the bet, very popular recently with what we've covered with Tom Lee and Joe Lubin and others. Yeah. I mean, how do you see that maybe shaping up and being built into things? Because some of this starts to get a little bit recursive. I'm already seeing some of the shares in SharpLink potentially be tokenized and put back on chain, which to me is just like, what are we doing here? But like, how have you looked at the trend, and what do you think people should know?
Yeah, I mean, to some degree, there's some financial wizardry that's happening just for the sake of it, right? If everyone's decided, when you ask someone why is the equity version of the same thing worth more? Because it is, right? We just say it trades at a XX MNAV premium, and no one questions that. They're just like, okay, that's just what it is. The market's decided it, therefore it's worth more because we said it's worth more. I don't know how sustainable that is, but it also doesn't matter because that's kind of a short-term mindset. I think in the long run, obviously accessing TradFi pools of capital that previously were difficult to access is going to be bullish for us overall.
Yeah.
We've done a few of them. We did SBET, we did UPEXI. There's a handful that we did as a firm. I did a couple more as an individual. I don't know how long this is really going to last. And there's definitely going to be, we see probably 10 deals like this a week that we're getting introduced to. We've done very few of them, and we're going to see more and more of them. At some point, something is probably going to break with some of the lower quality ones. We'll have maybe a little mini crash, flight to safety, and then it'll be up from there, I think.
Yeah, in terms of how that plays out, I think that's always good just to kind of walk through the steps so people can be prepared for what that mini crash might look like when it does hit, because we've certainly seen recursive loops to the downside in the past.
Yeah.
And so, I mean, I would agree with you that I think some of the worst positioned ones, because if you think about what Saylor's been able to do by doing it for so long and establishing so much trust in it, he's able to do things that a lot of these other earlier entrants are not able to do.
Yeah.
So how do you see that playing out if it is the case that, okay, maybe every one of these crypto ecosystems could have their own slate of treasury companies?
Yeah.
And if that's the case, farther out on the risk curve for some of these, it's going to get ugly, I would assume.
Yeah, I think if it's a genuine shitcoin or something completely esoteric and it's literally just financial engineering, that's not going to be sustainable. But recently, I'm sure you saw the Stablecoin X announcement by Ethena. We backed that as well. That's an example of one where that's backed by the actual foundation. There's preferential agreement between the two, right? The public entity and the token co, and it's ultimately underwritten by actual revenues that are profitable, right? And so if you look at that setup, the public equity is effectively linking traditional markets with the token model. And if the token value accrual mechanism works, then you're effectively tying the revenues and profits of Ethena, the protocol, to the public markets. Mm-hmm. And that's kind of how it should be. And maybe this is sort of more like a temporary process. I imagine, 20 years from now, 10 years from now, even there might be a different way for tokens to access public markets, and maybe those two worlds will get blended. But for now, this is a good two-step process, like an airlock, right? With like a space station. Yeah. It's just like a temporary mechanism that's probably going to last a few years.
Well, I don't know. I think, like you said, it's all this stuff is playing out in real time, and the idea of Michael Saylor being able to trade at a premium, a sustainable and prolonged premium, by the way, because of basically what he was able to do with accessing public markets first, just by putting Bitcoin in there, and then the ETFs came out, and he's still doing it afterwards. It's kind of been interesting, to watch that play out. But there's another kind of element to this too, which is kind of somewhat, arbitrage across markets, right? And the idea of even going back to what we were just talking about with stablecoins and people abroad being able to access US dollars. Yeah. You've also got elements of this kind of being, being able to access US markets via these publicly traded companies and kind of what's being done here. You being out in Asia, how are you witnessing kind of how these elements are playing out on a global stage when it comes to like our government now here becoming really pro-crypto in Trump's policies, and what now is maybe flipped from people in Dubai who were always like, we're the crypto capital of the world. Yeah. What does that look like to you?
I mean, firstly, it's amazing, right? I left the US to join BitMEX in 2019. And at that time, we had to be based outside of the US for obvious reasons. It's amazing now to see perpetual swap products being offered by Robinhood, right, and Coinbase right on shore. And so you look at the world, how much has changed in the past 6 years since I moved out to join BitMEX in Hong Kong. A lot's changed. I think before, like you said, Hong Kong, Dubai, Singapore, at different times, each one was vying to be more innovation friendly with fintech applications and crypto more broadly, blockchain, et cetera. Singapore, after FTX, took a 180. Hasn't been that great of an environment. It's more of like, it's kind of like the Miami of Asia, where there's a lot of founder types and there's a lot of people who have made their money. Arthur's based there, right, in Singapore, often much of the year. And there's not that much new innovation coming out of Singapore. Hong Kong is what it's always been, a trading hub. So everyone's just like, there's market makers, there's traders, there's hedge funds, prop shops, things like that. Also has a lot of exchange folks. Exchanges aren't really based there, but a lot of them have like 20-30% of their workforce shadow working out of Hong Kong. Yeah. So I think that Hong Kong, as a result of not having tethered too closely to the FTX of the world, right? Like specific projects, but more just kind of remaining this agnostic, we'll look away as long as you guys don't fuck shit up, right? we're just going to let you guys do what you want. Yeah. Hong Kong has remained more friendly and now wants to capitalize on the stablecoin concept, because Hong Kong dollar is one of the first original stablecoins pegged to the US dollar with the same mechanism. So Hong Kong is trying to take advantage of that. But generally speaking, and Europe obviously was never on the map in any way whatsoever, but Dubai also was trying to vie for that position. But generally speaking, it was those three, right, were the main primary hubs, with tiny little ecosystems in Switzerland and some parts of the US. But a lot has changed in the last 6 months. I feel like now Asia's feeling a little bit left out. And I was just telling you right before this, I'm considering spending maybe a third of my year here in New York, basically because this trend, it's moving this direction.
I think it's happening. I mean, we've always heard about this idea of crypto capital of the world, crypto capital of the planet, and what Trump's been trying to do. And now the crypto industry has kind of come mainstream, at least more so than it was before. I wonder what your take is on kind of plugging all of these entities that have been spun up into yield opportunities, into treasury management. Us here at Coinage, we've got our own ETH treasury that we kind of worry about as we scale. I mean, what are you seeing in terms of opportunities in that field?
Well, I think just kind of zooming out a little bit more generally, right? now you got these anchor business models that are anchoring these categories. So for example, stablecoins, right? You've got now we have two types of stablecoins that have shown success. You've got the USDT, USDC model, and then you got the Ethena model. I think that now if you're a founder, right, and you're looking for new ways to add to this ecosystem, you kind of want to build a business that is set up to be acquired by these guys over time, or at least is additive to their revenue models, and you'll be able to take advantage of what they've already built and ideally become a business partner to them. So I think it's kind of obviously that's kind of a high level concept, but if you imagine you look at USDT or USDC, they only got really one revenue stream at the moment. If you can figure out ways to help them diversify their revenue, they will acquire you. So I think if you're you take that kind of model and you look at all the different categories, right? The whole ETH staking ecosystem, DeFi, et cetera. Once something is done really well, you should set yourself up to be acquired by these guys.
Yeah, I think that's kind of the interesting piece. You kind of mentioned getting acquired by these guys. And as far as M&A activity goes, I know that that's kind of another element of what you guys are looking at in terms of running the fund. We haven't seen too much M&A activity, though it has ticked up higher. I'm thinking of Bridge getting acquired by Stripe. I'm thinking of a few other ones. But what do you look at in terms of why that's been the case, why there haven't been that many M&A deals? And maybe I'm wrong. You tell me if I am. Or kind of what you see coming now that we're in this new chapter. Yeah,
I mean, it's just picking up, right? There's been M&A, but for the most part, it's been strategic acquisitions. So it's been a company that has a certain business model where it identifies another company, fits that business model, and so they acquire them. Usually they overpay. Usually the terms are, in terms of cash, kind of 50-50 with equity and cash, and then there's a long earn out period, and you're essentially just combining two businesses. But what we haven't seen much of yet, and what we're trying to do and be pioneers in, is financial sponsors who don't have an actual company to envelop the target. Financial sponsors that just want to buy a company, run it better for a few years, and sell it maybe to one of those other companies, or IPO it, or tokenize it, or whatever. Figure out a way to exit.
Mm-hmm. In those, I guess, opportunities, what is it that you're looking for? Because so much is built up in kind of, the financial space, and like you said, tying into existing crypto businesses. But I wonder if long-term bets still exist outside of maybe just those. If there are other things, Deepin might be one that years out you see as maybe it's not there yet, but it needs a little bit more time.
Yeah, I think what's actionable for retail is. I think Deepin is a great category, as you mentioned, right? Where this is clearly, at some point, Deepin is going to be larger than all of DeFi today, right? Because it's integrating with the entire world, the global economy, every single thing you do. And it'll have its internet moment at some point where it's no longer, it's a .com business, like we used to say, right, in 1997. Just businesses are all on the internet. It's going to be something like that, where eventually physical infrastructure networks are going to underpin basically any business that has physical infrastructure, and it'll underpin, if it doesn't underpin every business, it'll underpin at least someone in their value chain that they care about, right? So I think that's probably a longer term bet that we're excited about. We've dabbled in a bit, but it's a little broken right now. Value accrual mechanisms aren't really working. We haven't really seen anything really take off yet, but it's early.
Well, it's kind of interesting to think about kind of the big opportunities in crypto. If you and Arthur are debating that it's either going to be ETH or Bitcoin, that's kind of not what you would expect to hear at this point of altcoin season. Yeah. And maybe that's because altcoin season hasn't really played out the way that a lot of people thought it would. I'm curious to get your take on kind of where we are in that piece, because a lot of people are saying we're just starting to see the early innings. I'm kind of in that camp that okay, we might be there now. But if that's the case, I mean, are we past the days of these L1s being the best opportunities in crypto?
Yeah, I think that it's going to be very hard to replicate what we did before, right? So there was a time where if one L1 pops, the others will all pop, right? Just different degrees. I think there's enough network effects now to where if you just launch Solana competitor 1, 2, 3, 4, 5, 6, you can't expect that to work. And right, we've seen that with DEXs. It's a great example. Hyperliquid kind of came out of nowhere, quote unquote, right? In the past few months. But besides that, there have been probably 10 DEXs launching a month on all different chains for the last 2 years, and none of them ever took off. So I think that there's a flight to quality happening.
Yeah.
There's two. There's a flight to quality and there's a flight to familiarity, because there's some low quality, shitty old tokens that have been around for a while that for some reason are pumping.
Well, I just feel like there's like maybe some risk that maybe, you wouldn't want. And again, despite what you just said and what I would agree with, we still see people taking big bets on like new L1s that would have a lot of risk, I assume, attached to them.
Yeah.
Is there an area of crypto that you feel confident saying, no, this is definitely bad, this is definitely dead, it's not coming back?
Okay, so my bet personally is that meme coins will be like NFTs of the last cycle. I don't think it's gonna survive. It might survive maybe the rest of this cycle.
Yeah.
It might have a little pump with Bonk, but I don't think it's coming back after 1, 2, 3, 4 years.
I think it's what we're seeing with the pump token drop is maybe indicative of that, just because it's been down only for a little bit here.
Yeah.
I mean, to me, and partially where I come from with what we're trying to build, is that a lot of it's just because none of that manifested in a positive way, because there was distrust around like, will this thing die? Will this meme coin eventually will I get rugged? And so like a platform built around that was never going to necessarily be sustainable. But if you can build something that is, and potentially can deliver value back to holders, which is why I think a lot of people are excited about DePIN, then that's a very different market. Yeah. And I don't know necessarily if you think we're there yet, with kind of some of these tokens still potentially falling under the same kind of cycle of early investors holding a large chunk and what you might need to see. But I think that's also why people are cheering on the Clarity Act and getting some sort of semblance of rules that can be followed to kind of deliver confidence in markets.
Yeah. Yeah, I think for this cycle, if I were retail, I'd just be focused on DeFi for the most part. DeFi and then some stablecoin stuff that you can touch, and then the infrastructure stack that relies on, which is mostly Ethereum.
Yeah, no, I mean, I think one of the last questions that I'd have is, in this chapter, you mentioned if I were retail. How much do you think has shifted in the world of like just straight up all that's left might be institutions? Because I look at like the pump fund token and I'm like, okay, what does that mean if, I don't know how many institutions are interested in the pump fund token. I could be wrong. But certainly it was more built around retail. And after everything that's happened in crypto, there's the BlockFi collapse, Celsius collapse, all these different collapses, I don't know how much retail excitement still kind of left. And maybe that's what comes in this kind of like pump cycle of when you have, number go up, you bring in new people and that flow starts again. But I don't know, you've lived through cycles before. What say you about how much retail activity is still there? Yeah,
it's a good question. I started buying Bitcoin in 2013. So I've been through 13, 14 crash, 18, 19, Black Friday. I'd say I've been through about 4 or 5 crashes, right? So you could say like 3.5 cycles roughly, because they weren't full, not all of them were full cycles. Every time it felt like retail is non-existent, right? They're like, where's retail? Who's the next bag of buyers? And every time it feels like, well, we're running out of steam because we're tapped out, right? We've already tapped out this market. There's not much left, not much juice left to squeeze. But the world is bigger than we think. And I think, there's always new buyers, and they change in nature, they change in size. Now we have like family offices aping into projects that, 3 years ago were unimaginable. We got endowments now doing direct primary investments in tokenized projects. That's pretty crazy. I think the world of buyers keeps getting bigger. Retail gets richer, right? If you're, I was once retail as well myself, and that just changes over time. You graduate out of retail over time.
Yeah.
As you become as you transition from enthusiast to professional in the space. And I think, like there's new things that capture retail's imagination. Meme coins came out of nowhere again a few months ago, really, like maybe 6-12 months ago. And there'll be other stuff that does the same.
Yeah, no, I think it is kind of interesting to think about, not just the publicly traded treasury trend, but we are seeing states as well. I mean, it wasn't too long ago that we saw U.S. states start to establish laws for Bitcoin treasuries. We're going to wait and see what happens at the federal level. But I do think it is kind of interesting. I think it's the University of Michigan pension fund that's on the Strategic ETH Reserve site. So it's like this stuff's happening, and it's happening at larger and larger sizes. Yeah. But I guess, when you mix all of that together, maybe that is why you're still betting on Bitcoin versus a lot of the other stuff. It's just that's kind of the best place to put your money.
I kind of think so, yeah. I mean, I've been doing like a drip style investing, and it's automated weekly buys on Coinbase since 2013. And that's the only recurring buys of any sort, of any asset class that I've never touched, I've never turned off, never changed. And I'm, personally, kind of gone through a full cycle. Arthur used to be a Bitcoin maxi, then he became pretty open to ETH later on, like really after DeFi summer. I kind of came the other way. I was like, whoa, this Bitcoin shit is just a glorified meme coin. It kind of is. But Ethereum, that's where it's at, and the L1s and this and that. Now I'm kind of realizing, okay, there's a flight to safety with Bitcoin, and I think that's not going to change for me.
On that point, though, I think in terms of the evolution of it all, I would agree with you that it's like, okay, look, Bitcoin always had the narrative of like, we're over here and, unsustainable cash printing is over there. And like, which one do you want? And that narrative continues. That almost never goes away because it's a bet that's always safe in terms of, that's the way that fiat currencies have always worked. And what's the alternative? And, the critics will always say that Bitcoin trades down when volatility strikes. And so it can't be that flight to safety. But are you saying that it's the flight to safety within crypto and also over a long enough time horizon?
Exactly.
It is always going to be.
It's the time horizon that matters.
Is it still surprising to you, though, in that kind of, I have conversations with smart people all the time that still think Bitcoin's like volatile and risky and don't appreciate that we're sitting here north of like $115,000.
It's crazy. I mean, look, any new asset class is going to obviously have maybe a more bumpy price discovery process.
Yeah.
But I think that volatility, it's not that Bitcoin is volatile, it's that the US dollar is volatile, right? And our monetary supply keeps expanding, and Bitcoin's not changing. It's the exact same number of Bitcoin that's been around basically for the past few years. It's asymptotical in terms of new issuance. So I think it's really a reflection of the volatility innate to our system.
Yeah.
That predates Bitcoin.
That's a very good point. I think to wrap up, one of the things that we like to do with everyone who comes on Coinage, who, like yourself, comes from this world, who's seen cycles, for their predictions, and their big, bold predictions for, I think, the rest of the year is maybe fair to limit it to. So if Akshat were looking out to 2025, what do you think is one of those things that people, even in crypto, are sleeping on that you see coming to fruition?
I think AI agents, we had a meme coin version of that play out in January, February.
Yes,
I think that's going to make a proper comeback later on this year because their team's working on some pretty cool stuff.
Interesting. Okay, so let me ask you about that, though, because we had one of the other smart people we had come on the show made that be their big, bold prediction that it was overblown.
Yeah.
And I think that's what you're referring to in terms of the meme coin AI bubble that Virtuals kind of led with. And then it died. But are you talking about like ones that will actually have real revenue?
Yes.
And then actually distribute that to people who backed them?
Actual agentic AI projects, not meme coins that tweet. Yeah.
How do you see that actually playing out, though? And I say actually a lot.
Yeah.
Because what do the steps look like to get there?
Well, I think there's a lot of data that we're producing as an industry on user behavior. There are projects right now, and there's teams working in stealth that have been building. It takes a while to build up this kind of this data set. We built it. We're building it now. It's expanding, and it also takes a while to train bots on that data. That's been happening in the background while people were playing with these like meme coins that were called agentic AI projects. I think some of those will start to hit market and go to market, and probably start off in the form of basically advanced bots, trading bots, right? And from there, those will evolve into full-blown execution venues. And that's going to happen probably over the next 2 or 3 years.
What do you see as maybe the best way to capitalize on that theme? Like, what are the ones that are going to be, I guess, the most efficient at monetizing what AI agents can do?
Which types of projects are actually going to be able to take advantage of this?
Yeah,
I think the ones that have strategic relationships with exchanges, with brokers, things like that, it's going to be really hard to come in as an outsider, right, and just expect to be able to, replicate basically the same value chain that you see in traditional trading on crypto. To replicate that from the outside is going to be very difficult. But those that are, the tie up with the Binances of the world, they'll be able to actually come in and alter the value chain of how trading is done today.
But in terms of like the services that then get used to create the value that leads to the tokens, a lot of people are talking about like, agentic travel bots or agentic insurance agents, whatever it looks like. I mean, is there one that you think will take off first?
I'd say the whole category, but honestly, it kind of ties into the intents narrative, right? That was kind of a concept people were talking about a year ago. I think multi-step execution will be the first place where it just makes sense, and we'll get the most product market fit. That process will take some time, but I think that's where we'll first see the wedge that gets retail to actually use the products, and then we'll go from there.
All right. Well, we'll be watching to see if that trend plays out, because certainly, I mean, everything that was built in agentic AI was very similar to what we saw play out in Memecoin. So I'm hoping, fingers crossed, that we will get out there at some point. Akshat, I can't thank you enough for coming by, man. Thank you so much for being on Coinage.
Thanks for having me.